Everyone. My name is RJ, and today I'm going to be talking about ethics in accounting. I'm going to be discussing a situation that has been posed to me where I take the role as an accountant in a specific moral and ethical dilemma, and I will be talking about a real world example of the failure of ethics in accounting and giving my decision what I would do in this moral dilemma. So, firstly, the situation is as a junior accountant, I am asked by my supervisor to relocate overhead costs to specific product lines to make one appear better than the other. While this is not illegal, this isn't ethical. And I am posed with the problem of what I would do in the specific situation. Now, firstly, we have to go over the ethical violations. Now, what one of these ethical violations are is a power struggle. Since my supervisor is posing me this, there's some added pressure to this. My supervisor obviously has power over me. They have power on giving on my workload. They probably have a say in my salary. They likely have a say in, my hours and how much I work. And most importantly, they're adding pressure to the situation because they make decisions on my employment. Um, since it's my supervisor posing me with this, I can't, it's not as easy as saying no to it as it is my coworker. And so that is obviously a huge ethical violation in the situation. Another one is this violates our company guidelines. It's stated in our company guidelines that we must act with ethical behavior, and we're simply not. Um, and it doesn't act in IMA either, which I will get into in a second. But we're violating our own books, we're violating our own rules, and ultimately we hold ourselves lower to our own ethical standards as this company. And if I make this decision incorrectly, this could um, stain poorly on how we act ethically. Now, according to the Institute of Management of Accountants, they have a clear guideline on how managerial accountants are meant to conduct. We must hold principles of competency, confidentiality, integrity, and credibility, and these ethical issues should be resolved in a professional manner as well. Failing to do this shows a clear disconnect with IMA, and that is a failure as an accountant. Every accountant should be able to act within IMA. And if I follow through with reallocating these goods, I'm putting myself at risk, I'm putting my coworkers at risk, and I'm putting other departments at risk. For example, if I do make this decision, then I will likely be investigated. My other accountants, my accounting team will also be investigating their practices. And also, hypothetically, if we look into this department of these various product lines, they could be seeing various budget cuts. They could be seeing various, they could even be seeing layoffs because if I'm reporting that these profits are happening and they're not happening, then hey, it's the money, we have to come up with this money somehow, and things have to be addressed. And so, a real world example of unethical failure is Enron. Enron was a huge energy company in the 90s. Pretty much, they were a multinational, I believe, natural gas company in the 90s, and they were huge. They were trading at like $90 per share on the stock market. They were one of the biggest companies. Everybody knew of Enron. Everybody wanted to work for Enron. However, Enron was using very shady and very manipulative accounting tactics. Firstly, one of their accounting tactics was they were using mark to market accounting. Now, what that is they would report their accounting based off their predictions rather than what they were actually earning. So, for example, as a business, we predict that we're going to make $1 million revenue. However, we only do 500,000. Instead, we'll report that $1 million because that inflates our revenue rather than that 500,000, which we obviously made. And so that obviously inflates profits. That's misleading on our income statements, to say the least. And another thing that they would do is that they would set up these SPEs. And now, what SPEs are? They're special purpose entities. Special purpose entities are made to limit risk. So, for example, if I'm a construction company, I will set up an SPE in order to, let's say I have a big project coming up. I will set it up under this SPE so it doesn't hurt my parent company if this falls through. So what Enron would do is they would set up these SPEs and they would have it take out large loans at banks. Now, banks don't just give out large loans. That's pretty much unheard of. And so since Enron was trading at such a high price and since they were so trusted, they'd be like, all right, we're going to put up our stock as collateral. And so since now Enron is technically taking on this debt, they are supposed to report this on their balancing sheets, and they simply were not. That is obviously a huge failure. That is incredibly illegal. That is huge fraud, and that obviously is super unethical. It violates confidentiality. It violates integrity, and it proves that Enron cannot be trusted. And so the backlash on this is their CEOs were arrested. I believe two of their CEOs were sent to jail for 20 plus years. Along with that, Enron went bankrupt. It was the biggest bankruptcy at the time. I believe they went bankrupt in 2001. Um, Investors lost billions of dollars, big B, billions of dollars, and overall their employees they were laid off and their retirement savings were lost. And so this is a huge one of the biggest ethical scandals, excuse me, ever. This proves that caring about your ethical manner and how you act as a company matters, because you're affecting many people when you choose to make these huge decisions without thinking about ethics. And so this was a huge failure by Enron, and I will not make that same mistake. So my decision, I will be going to a higher manager about this problem. Um, I just simply will not stoop that low into keeping my job. Um, while yes, my supervisor is telling me to do this, I'm going to be telling my supervisor no, and I will be reporting my supervisor even if it costs me my job. I believe it is extremely important for every accountant, whether you're entry level, whether you're working in Big Four, whether you're in tax, audit, whatever, to act ethically. That you are in the hands of a whole company and you represent your entire company. And failing to do that is a failure on your part. And that's what I have learned. My reflection is that ethics in managerial accounting is incredibly important. That's obvious. I mean, I feel like I've stated that many times within this, but also that it's not important just because you need to protect yourself. Like obviously, you need to protect your job. You need to protect your reputation. However, you can also affect so many others with your own ethical actions. Like using Enron as an example, people out there didn't have retirement savings. That's a huge problem that affects many households. Many people had to go home to their husbands, wives, and kids saying, "Hey, I just lost this huge job, and I don't know how we're going to finance our home anymore." All because CEOs were telling their accountants like, "Hey, report this on our income statement like this, report this on our income statement like that. Here's where we're going to set up these SPEs and commit fraud." And ultimately, that is why maintaining ethical practice is important. Because yes, you matter as a person, your job matters, your reputation matters, but you also need to protect others. And so overall, ethics in accounting is super important, and honesty is more important than holding any job ever. Thank you.